Good morning, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 10:19 a.m. on a Sunday morning, February 25th, 2018. This is a private advanced coaching session for paid members, or I shouldn't say paid members, paid students. Thank you for taking the effort to move to the next step of what we call tactical trading. The session will be recorded and uploaded to the Clueless Trading YouTube channel. It'll remain private, and at any given time, all of you can access it by clicking on the webinar. I'll make sure that they go ahead and put your email addresses on there. You receive a link, you click it, and you have access to it to review it at your own time. Full disclosure: this private ACS or advanced coaching session is solely for financial education and not for any solicitation or advice. That's always the case with any trading service, and especially mine. We're not in the business of advising. We're in the business of teaching independent traders to trade independently, learn the skills of how to navigate these markets, and to build their own trading book and their own P&L, profit and losses, profits, hopefully. Okay. Today's topic is going to be very specific for the next hour, probably going to spill over a little bit more than an hour. We are going to focus on two major topics. One, as I mentioned before, is trade positioning, trade management in volatile markets, and the markets are certainly volatile. I don't need to remind anyone on that. It's always been volatile, except the volatility has been enhanced over the past month or so, and the swings are larger, as you all know. So that's going to be the primary topic. The second topic is going to be how to because they're all connected. With the trade management side, how you can look at all of the tactical charts and how you can manage your profits, especially in fast-moving markets. Couple of really important things, guys. Okay, trade management is probably the most critical and the most difficult factor when it comes to active trading. Now, whether you're a day trader or a swing trader, it really doesn't matter, because the fact is that if you are not quite fully understanding, depending on the size of the trade that you're putting in, where you need to get out, where you need to take a bunch of your profits down, leaving some of it running, and things like that, it is almost impossible to, on a consistent basis, and I don't mean every single day, I mean every single week or every single month, to really grow your trading monies. It's really as simple as that. There's no 1 + 1 = 2. Like, if you do this exactly, it's going to work like that. But there is a certain method where accounts can grow, whether they be large accounts or small accounts. There is a certain restriction if you're trading with a very small sum of money, obviously, because number one, the restrictions are that you can't, first of all, you can't take advantage of the big swings that happen in the market on an intraday basis during the day, or on an intra-week basis, because you don't have enough cash to work on it. Number two, you cannot recycle that money if you are sitting on a non-day trading account, which generally under the New York Stock Exchange and SEC rules is a minimum of $25,000. Not everyone has $25,000 to trade or grow their money, especially in options trading. So you have to basically understand that regardless of multiple trades that are moving forward, and then a couple which are basically kind of sitting flat or slightly down for the day, unfortunately, you will be in a disadvantageous position because you don't have the cash to take advantage of moving to another position or adding to a position when it's pulling back a little bit for no fault of the company, but simply because of volatility. Volatility is not a nice thing. Okay, they make it sound like it's a good thing. You listen to the media, you listen to the news, and they tell you, oh, it's great. The markets, volatility is good, volatility is bad. No, the only people that volatility helps, to be honest with you, and they are the ones who selfishly keep on proclaiming that volatility is a good thing, are institutional and floor traders on the New York Stock Exchange and the market makers who basically, set the prices and stuff on the Chicago Board of Options Exchange and people like that. So they basically keep on making it sound like volatility is a great thing. No, it's not, because you take a fantastic chart setup on a solid company. You're sitting, you buy into it. It goes up a little bit, and then within maybe 15 minutes, it pulls back. It's going to go to where it's going to go. Okay. And as you know, my charts have been dead right on where they eventually land up. But during the day, these big buy sell programs that are generated by these machines, which are known as algorithmic high frequency trading black boxes, in other words, they're super fast computers, they're day trading. So when they're day trading, the retail trader like yourself, and myself too, I'm a retail trader, eh, eh, uh, we sometimes get confused. I don't really get confused that much. Do I feel good sometimes when my positions are upside down? No, I don't. But that doesn't mean that I panic and do stupid things. And you guys know that. So that's what I try to share with all of you guys on a daily basis. What keeps me, the only panacea or the only solution to that type of problem is, and this is the God honest truth, and this is the fact, is that you have to understand and track the swing charts. If you're sitting on a swing positions, you have to track what I'm showing on my intraday tactical charts, despite the fact that those waves of up and down programs will always attempt to get you out of that trade. Do all three of you understand what I just said? Because that is one of the most important statements I'm going to make today.
Yes, I get that.
Yeah?
Yes, Frank.
Okay?
Yes.
Because that is the biggest problem. Now, that's not a problem that's going to go away. In choppy seas, on those high seas yacht races, right? Those catamarans that are run by Oracle and Richard Branson and all those guys, sometimes they have those great races in the Caribbean. Then they have it in out there in the Atlantic, off the shores of, uh, uh, you know, up there in the cold seas, and then they have it in Australia. They don't, they manage that boat, they manage that yacht, they manage that catamaran through the heaviest swells up and down. That's trading. Is it easy? No. Is there a certain method to it? Yes. Do you have to acquire the skills to manage it? And that doesn't mean you have to be looking at a screen every 5 minutes. My service offers real-time charts on a daily basis, so that people don't have to basically always do their own work. You guys know that. And daily basis doesn't mean that I'm going to put up a chart every 5 minutes. That's not constructive, and that's not physically possible. But every hour, every half an hour, there are charts put out there keeping people on that roadmap or that guide path, or keeping their positioning in their trades intact. Because the job of like I told you before, like the job of these machines are to get you completely scared, emotionally disturbed, and take you out of that trade, and then they go. There have been so many of these instances. And let's talk about the most recent one, Friday. Or let's talk about this week. How many times the market intraday attempt to shake people off? On Friday, and this is one of the things that I'll show you a bit later on, I stuck to only one thing. That's not only on Friday. I mean, that's what I do. I kept on looking at the swing charts on the and these are all swing charts, S&P 500, the SPY, and then this one. Okay, this is the E-mini futures. Now we don't trade futures. I used to trade futures, but we use this as a proxy or a very powerful roadmap so we don't get shaken out of the trades. Period. And having a small position in these type of things, which is the S&P 500, can yield fantastic results. Case in point, Friday. The SPX calls, excuse me, I'm having coffee. The SPX calls, the 2750s on Feb 28th, I put them out there. They were around $4. They dipped a bit below that. They went to 350. They went to around, I think, 320 at one point. These are expiring on Feb 28th. You have to have time on your hands. We're going to go over that, which is part of the trade positioning. And the Feb 28, 2750 calls were around $4 approximately. When they dipped a little bit, I bought a little bit more. And I kept on looking at this chart here, not just the intraday 1 hour charts. I'm looking at the daily charts here, which gives me an idea. Is this candle, which is billions and billions of dollars, okay, is this expanding or is it shrinking? Is it turning red like an inverted hammer, which means the market's going to pull back a bit? I know the levels it's going to pull back. That's why these lines are drawn. And but I saw it kind of going back and forth. It never turned red, but it started to, it remained green, which is a positive sign. So I kept on adding more, kept on adding more. By the end of the day, they were $13.90. Let's call it 14. I put out the options chart on that, which on my Twitter feed. Now that's one of the most critical parts of my trading service. You have to look at my charts. Doesn't mean you have to do that in the middle of the day when you have a busy meeting or running your own business, but you can always glance at it. That's the whole purpose of real-time feeds. Technology allows you to take a quick look at it when it shows up on your mobile iPhone or any other mobile device, on your iPad or on your laptop or on your PC. It takes a quick 2 seconds to glance at it. And the more you look at those things, more you look at charts, and the more you participate in these advanced coaching sessions, the more you get involved in what I do in the form of my real-time alerts and the posts and stuff like that, and my comments that I write, the more the charts are going to talk back to you. It's just a, it's a acquired skill. So for some people, they're quick on catching up with it. Some people, it takes a little bit longer, but it's not hard. The more, it's real simple, and one of the most important simple facts of trading. The more you look at charts, the more they become your friends, keep you in the game, make you more money, and they keep and they start talking to you. So don't forget that. So on that note, you have to basically keep an eye on my real-time Twitter feed. And if you are really that busy that day and you're sitting on a swing trade and you're down for the day and you're wondering what's going on, well, go back at the end of the day, spend 10 minutes, doesn't take that long, and scroll through the Twitter feed. And if you just want to look at the charts, then click on the media section on your Twitter feed. Remember, you have to embrace technology. This is all about, all these Twitter and real-time alerts and all this stuff. This is all fast technology. At the end of the day, just go to the media section on the Twitter feed and all the charts will show up, and look at it. And a lot of people don't do that. I don't know if a lot of people don't do that. I don't know, but I think a bunch of people don't do that. So what happens is when the market gets really choppy intraday, okay, they do stupid things. And then they sit back and say, why the heck did I do that? Because overall, I would say good 70 to 80% of the time, if not more, I'm dead right. I don't make these things up. Some people say, how the heck did you know? Well, what do you think? I have a crystal ball in my head? No. I basically rely on my charts. I understand the markets. That's my job to do. Understanding the mood, the sentiment, where the markets are all about fake outs. You know that. They're all about fake outs. They want you out of the game so they can go higher. Now, who's they? They are the so-called smart money. And that smart money used to be humans. It's no longer. That smart money is a bunch of super intelligent, self-learning, algorithmic high-frequency trading computers who constantly are moving in between the markets, who themselves are moving in between the exact patterns that I'm drawing in my charts. Remember, algos don't look at charts. They look at a whole series of exponential and algorithmic numbers. And then the humans who run those machines have a set level that the market wants to go to. Regardless of the news that comes out, regardless of what you think or I think, they will take it there, up or down. And that's where I specialize in and I excel. The market wants to take the SPX, S&P 500 over the 50-day moving average. I've been saying that for weeks now, since the market had a major short-term bottom. I'm calling it short-term. I'm not saying that is the absolute bottom. I'm just saying for now, that is the bottom, which was around the 2,500 level. You guys remembered that on February 2nd and the 5th. I didn't panic on February 2nd on the 5th, even though counts were upside down on the long positions. I had cash on the side, and we played some short trades, intraday. We had one, and Max wasn't there. I'm sorry, Al wasn't there. We had a SPX short during the day on February on February 2nd that I proposed at around $4 to $6. I'm sure Scott will remember. It went to 90 when the market crashed 1,500 points. Did I ride it all the way from 4 to 90? Absolutely not. I'm not a liar. I'm not gonna lie. Did I trade a whole bunch of it along the way? Absolutely. And it was a 2-hour trade as the market collapsed. Did I know the market was going to collapse? Absolutely not. Did I know that there was a volatility trade going completely, was going up in flames? And for that, Al, you need to basically review my webinar, the reason for why, what happened on that eventful week, and then on the following Monday, which was the 5th of February. I explained everything very clearly.
Okay. I've been I've been going through some of this stuff, Frank.
Okay, I'm just saying that's the video which explains why the market blew up. Okay, the market didn't blow up because the U.S. economy is going to hell in a handbasket. The market blew up because there were billions of dollars on a particular macro trade, which was run by a whole bunch of hedge funds, and they got caught when interest rates rose sharply, the 10-year bond, and that caused the VIX to basically, they were all short the VIX for reasons I have no idea why. And when the VIX trade blew up and the VIX went from, I think, 11 to 50, unheard of. Okay? It hasn't happened in 50 years. That in one day it does that. They blew up. So when they blow up, it affects everything else in the market. So bottom line is, that's what we do. Now, if you are, so what it really comes down to, what we're going to do, we're going to talk right now that, I've given sort of the broader basics. This is an intraday 1-hour chart. This is a 1-hour time frame, even though it spans a whole bunch of days. It's known as a 1-hour time frame on Thinkorswim. And you can see the choppiness. Okay? You can see the choppiness. It's not like, we created a double bottom. This was the Friday. This was the big crash, and then the Friday crash, the double bottom, and then the recovery. Now the recovery wasn't like this. Retail traders tend to think in very simple terms. Unfortunately, life ain't simple. Okay, we are all grown adults. Life is not a straight one line up or down. At our worst possible moments in our life, people who are strong tend to fight back and win. It's true. All right, and especially business people. So bottom line is that we know very well that through all the turbulence, it is not a straight line. You notice where the markets are right now. Was it like this? No, it wasn't. Markets heaved up, lots of chop during the day, retest again, and I'm not going to go into pattern analysis and all that stuff. That's on the, and this is primarily for Al because he's new. And welcome. At your own time, sooner than later, you have to go ahead and review the introductory member. There's a category saying introductory member videos on my YouTube channel. You have to go look at the bunch of videos in there. There's quite a few, but select the ones which are one second. Select the ones which talk about pattern analysis, talks about, and there is a video on how to read candles and things like that. A lot of it will make initially for people who are not technically savvy, and most people aren't, it's not going to make any sense. But I explain it in the simplest terms, as you know. So start doing that, and then a lot of things will fall into place. So anyway, so this is all volatility, hardcore. It hits the downtrend line from the highs that was all-time high on the markets when the S&P 500 E-mini futures were around 2878 and we were above 2900. I think close to 2900 on the SPX. And actually, let me just look at my other screen. The high on the S&P 500 close was 2873. So this was intraday. Intraday it was higher, but the close was 2873. So bottom line is there's a downtrend line drawn here, and that downtrend line was hit, but the market couldn't break out. This was as on Wednesday. Then a big pullback happened, big one, couple of 100 points. Everyone freaked out. This is just one platform I'm showing. All my other charts and stuff, I said no, the market's going to be fine. It's consolidating. It's going to break out. Uptrend intact. Pulls back again. Then on Friday, it zigzags around and then takes off like a rocket. And everyone on the media is like, the CNBC and stuff, oh, look at the market, this and that. They have absolutely no idea whatsoever. Even though they talk a lot about the terms that I've been using for many years, which is this is a robotic market, this is run by machines, all of a sudden they're using the same words over and over and over again. Good for them. Finally, the world is catching up that humans don't run the market. It is basically a very technical market. So good. So, and then we had a big move up hundreds of points. I don't know. How much were we up on Friday? We were up 347 points. 347 points. And I called it. And this is the first time. Do I take credit for it? Absolutely. Did I help a lot of people make a lot of money? Absolutely. One of our traders made close to $60,000 on SPX calls itself. Okay, he's a bigger trader, but he was upside. He was accumulating. He was down at certain points during the day, and he just trades my SPX calls and the SPY calls or puts. And he texted me at the end of the day that by the end of the day he was up 58,000. And trade management, which we're going to talk about right after this, he took down half that position and put it in cash. And he's got other positions and stuff that he sits on. Is it rocket science? No. When you're up from 4 to 13 and I've been basically telling people to, and you don't have to take me at my word. That's the whole thing about my service. You have to look at the charts, make your own decision, whether or not it makes sense to you. And then you have to take into account what I'm saying, and then you act. So when these things went 4 to 13, I didn't ask this guy like how much he bought and this and that, but I'm guessing. Okay, this isn't one day. This is a 1 day move. I'm not talking the previous day when I had recommended the 27. I believe the 27. No, I was actually pushing the 27.50s for 2 days. In fact, down here they were around $2. So he was buying here. It's very, very easy to see. They tested the gap. It did what, and then it created a doji. That's a doji candle, and then this happened on Friday. So I'm guessing that he must have bought a good solid, like 50 or 60 calls, which is which a lot of people who have slightly larger accounts can buy $10,000, $15,000 worth a series of calls over a matter of hours or a matter of days. And if his average cost, let's say, was $3, and he had 50 calls, then the guy basically, yeah, that's what he did. He probably had 50 calls. So 50 calls with an average cost of $3 is $15,000 that he had running. He knows very well that he has time till the end of next week. He's following these charts. He knows exactly, because that's what I've been telling people, exactly where the market wants to go, which is 27.53 to 27.62. I even put out a fantastic article. Look at the bottom of it. This is the last article that I put out there. It says the fat pitch. This is a serious trader. Earnings growth matched the rapid pace of equity appreciation in 2017. Look what he says. Exactly the same levels. The market wants to go to 27.53 to 27.62. Do I say, oh, whoa, I knew this? Well, I know this because it's shown on the charts. Right there, these two lines. 27.53, 27.62. Here is where the big selling is going to come. Here is going to be moderate selling is going to come at 27.53. Market's probably going to pull back a little bit, create another one of those bull flags, and then it's going to go. And at 27.63, there could be some heavy selling because the last time it hit 27.63 after the first real drop, the market tried to recover a little bit and then failed and created the monster fall. Okay? So a lot of people were trapped here. So when you get trapped at a certain level, it becomes resistance. So let's say, for example, somebody bought, I'm just kidding. Somebody bought X number of dollars here. Let's say somebody bought $20,000 here. Now they're back to $27 right here. What do you think? They're obviously going to be more inclined to take the money that $27,000 probably went to 1,000 here, or probably went to 0. So he might have bought a little bit more here. Let's say it went to 1. Okay. So all of a sudden, without him not adding any stuff, which he should have, whatever the case, he's back to 20. He's like, God loves me. Let me get the heck out of Dodge. That's when the little pullback comes of these levels. Okay? And then the smart guy basically it knows that at this point, the market's got a lot of juice. So they will try to add more and go higher. But that guy who's an emotional trader basically went from 20 to almost 0 and now back to 20. All within a matter of, since the 5th till the end of the month. So he's going to sell, and that's what creates a small consolidation channel, which in simple English simply means a small profit taking channel as they get out, and then another big move. Eventually the market wants to go to 28.40, and I mean eventually doesn't mean like months from now. I'm talking by the first part of March. 28.40, that's where the big selling began. Now this all you can see with your own eyes on my charts that I draw, because that's when the nightmare hit. This was nothing. This was just a small, this was not small, but nothing big. There was a consolidation. That was a bull flag. If that volatility trade hadn't exploded in the face of all those big hedge funds, not big hedge funds, a lot of the smaller and medium-sized hedge funds, then we would have pulled back here, back at the end of January, and then went higher. a bull flag, right? Sellers, profit takers like us, who basically bought in at these levels, and then consolidation, and then a breakout. You guys have seen this all the time. So instead of that happening, the vol trade, as it's called, the volatility trade blew up. The notional value, but the overall value of that trade, notional value is basically the actual cash value times all the money that they borrowed on margin. Okay? And hedge funds do that all the time. I think they said was close to $400 billion. It blew up. That's the 400 billion times whatever. It's the market lost $2 trillion or something like that within a matter of week. Unheard of. So bottom line is that instead of this happening, this happened. So that's where the market's going to hit major resistance. And we'll see what happens after that. Do I think that the market can hit there and hit a new high? Yeah, I think so. It's possible. Trust me, it's possible. There's nothing wrong with the markets. Earnings are of companies, and read that stuff. It's all there. I put it up there. Read that one article, the fat pitch, the last one that I put out there. The guy puts down the exact numbers. U.S. companies are growing at almost 20% a year. So why can't the market make another new high? But in the meantime, the average retail trader who doesn't have the benefit of clueless A trading analysis, comments, and the charts and alerts is going to sit there and watch all this money being made, and they're going to cry over and over again. And then they're going to buy at the top, and then lose their shirt again. And then they're going to say, oh my God, this market, no way. Every time I get in, the market goes down. Yeah, how many times have you heard that? Do you think the market even knows we exist? Traders like to feel really special. Oh, every time I go in there, it's like somebody's watching me. You know, they're gonna hit me, and then my options go down and my stocks go down. Yeah, because every time you're getting in, it's when you're starting to feel good, which is at these levels. Obviously, the market's gonna pull back off these levels. So I always tell traders, as I talk it directly, as you all know, stop feeling so goddamn special, like as if you're the king of the hill, the king of Saudi Arabia, or the queen of England. Like as if the market really cares whether you're going up or down. In the meantime, just do the charts. So on this note, let's talk about trade positioning. Now, trade positioning is tough stuff. All right, it's actually not tough stuff, but you got to be. Over time, you acquire the skills. You got to move quickly on certain things. You got to hold certain things, and this is number one. I'm trying to. By the way, if any of you have an idea, because I'm pretty technologically savvy, but I can't seem to get a device where I can write directly on the screen instead of on a drawing pad, like with a what do you call it, electronic pen or whatever, instead of using my mouse. If anyone has any ideas, let me know. I think I'm gonna I probably gonna get this weekend a actual touch screen where I can basically directly use a pointing device to write. You understand what I'm saying? So if
Yeah,
any
Yes.
of you,
good.
yeah, because otherwise I'm using my mouse. It's like it's really I need to be really skillful to write stuff. That's why it comes out crooked. But anyway, yeah, I'm going to do that. So this way I can just use an actual what do you call it, pointer, and then write directly on the screen. I'm gonna do that. Let's see what happens. I tried some other devices, but which are called the Wacom bamboo tablets and stuff, but it doesn't work on writing on actual screens. So let's talk about. First of all, let's start with the basics. Okay. So the basics are there are primarily three types of stocks that we trade. Primarily. So three types that we trade. So number one are stocks like a very fast-moving, what we call high beta stocks, which is hedge funds are trading every single day, and you all know exactly what they are. Okay, these are the algo HFT day trading stocks. Apple. I'm not going to write all of them, but I'm just giving you a rough idea. Facebook, Google. Name another one, guys, in this category.
Tesla.
Tesla.
Thank you. Tesla. Priceline.
ABBA.
What?
Twitter.
Amazon.
No. What is?
Amazon.
Okay, exactly the granddaddy. Every day when the markets open up, it's up 15. I mean, it's just hilarious. I'm sorry, Al. What did you say?
I would say Alibaba.
Alibaba. Exactly. Thank you. Alibaba is a little bit different because Alibaba relies on the Chinese markets too. But you're right. It is a high beta momentum stock. But the real ones are these ones. And next favorite stock, Priceline. Hey, Priceline stock earnings on the 27th. I'm going to
I'm
set up.
staying away.
Oh, okay. But it's if you use a straddle on the long puts and calls, the stock's going to move big and you're going to win if you use a straddle. But if you want to stay away, that's fine because then you can get into it after that. You know what I'm saying?
That's what I was thinking. Yeah.
Yeah, but the problem is after that, the options are going to be freaking so expensive. You have to get a second mortgage on your properties to buy it.
Mm.
That's the drawback. Well, that's the drawback. The options are already expensive, right? But
Right.
but the thing is, if they have good earnings, that stock is gonna. I'm gonna show that chart as one of the charts that I'm gonna show, and I've been talking about it. That stock will go through 2100 so fast. So imagine how much the options are going to be worth. So if you try to buy an option, the problem with Priceline is that if you buy an option, let's say $100 out of the money, that'll move too. But if the stock doesn't move, then you're going to be stuck with that option, losing some value, right? So,
Right.
you know, it's a tricky situation. There's nothing cheap about Priceline. It's like going to a Louis Vuitton store because Louis Vuitton never gives sales, right? So it's like, you know, that's one of the only LVMH, Louis Vuitton, Moet Hennessy, they never give sales. So so bottom line is you got to either buy it, you know, a nice used one from a nice website, you know, Real, right? So
Right.
yeah, realreal.com or go to Poshmark selling one of their bags. You know, my wife's like, okay, I don't use one of these bags. Like, let me just sell it off for, you know, $500-600. You know, so aside from that, the actual retail store never gives sales. That's Priceline. You know, except nobody sells used Priceline stock, right? Like, oh, I lost some money on Priceline. Yeah, you only buy used Priceline stock when the stock's down. Like, remember I told people to buy Priceline when it was 1700, 1750 during the flash crash. And I bought a little bit, and boom, it jumped up. And oh, on the day that Expedia announced earnings,
Oh,
and
yes,
Expedia's earnings were real crap. So Priceline decides to fall $60. Percentage-wise, not that big, but still. And I bought it because I know how Priceline's business works. I've been trading Priceline since 2000. So and earlier. So bottom line is year 2000 and earlier, not stock price 2000 and earlier. So the point is that Expedia is losing business. That means Priceline is actually gaining business, and that's the way it works because they're in competition with each other. So I bought it. The next thing you know, the stock jumps up $70, and then look at it now. 1900. I said it was going to go to 1920. It actually did. On Friday, it hit it hit 1908. Good enough. So that's why. Anyway, let's focus on this. So these are the high beta stocks that you can trade intraday. You can swing them, but you can trade them intraday. The second major category that we have are swing trades. Now the swing trades can also be these trades, because I show the swing trade on Apple, for example, which we'll look at right away, when it would hit that flash crash, especially flash crash bottoms, when things just fall apart, completely fall apart. Those are the perfect moments to buy. They're the most difficult moments to buy, but that difficulty can be managed by looking at my charts where I'm showing these are the most critical levels in the markets for these stocks, and it looks like they're going to hold. So you can always put a tester amount in there. And then if it is correct, which it mostly is, during crisis situations, my charts tend to have 100% accuracy. And Scott knows that. He's been following it. I think he's looked at my stuff longer than most of you guys. But during crisis moments, I have 100% accuracy that it's going to work. Now, I don't like talking about it like, oh, it's a guarantee. There's no guarantees. But I'm just saying those are the times, generally speaking, So bottom line is that you can use these as swing trades of those type of situations too. you know. And Amazon, God knows that thing is probably wants to. In my opinion, if things go the way they're going in between back and forth, and we do test the high again, Amazon's going to be $2,000. It's trying to catch up with Priceline. They're like in a race with each other on stock price. One's 1,900, Priceline's still way off the highs, and Amazon's going to probably say, okay, I want to be 1,900 too. It probably will be. So anyway, so these can be swing trades also. Volatile swing trades, but swing trades, and then a lot of the biotechs that we trade. Now, these overall have been great winners for us, but you have to swing them. You have to buy the calls a month out, or if you buy them on a weekly basis because there's an expected buyout and stuff, which we have caught 3 buyouts, just so you know, Al, on biotech stocks. The most recent one in 3 buyouts in about 2 years. These are big money makers. Now, selective biotechs. I understand the biotech industry well. I'm not an expert on it, but I don't want to be an expert on it. I just know the ones which are the leaders in that group. So the last one that that got bought out, Al, was Juno Therapeutics. I was telling people to buy it from 20, 30, 40. It got the day that the buyout was mentioned by Celgene, the stock went to 90. Calls which were at 20 cents went to $16 to $20. You're talking about huge. A trader in our group, I think I mentioned it. I didn't mention the dollar amount. Made $160,000 off. I think he just had a couple of $1,000s left, okay, in those calls. But we kept on buying them. Juno Therapeutics, and recently, I'm talking 2 months ago. And I have a select bunch of them. And if you care to look at my Twitter feed and scroll down, you will see a basket of these stocks that I constantly keep on swinging. Okay, both in common and in options, which I know that 1 or 2 of them are going to be gone in a flash, bought out. So this is not magic. It's a systematic approach to the markets. Okay, it's not like hoping, like, oh, But biotechs are if you buy the same old names over and over again that everyone buys, like Gilead Sciences, and I'm not going to say garbage, but those are the acquirers. They're the ones who are lacking in business, so they need to buy my selective baskets, which are the mid to small cap biotech technologies in cancer, in multiple sclerosis, in Duchenne's disease and stuff like that, which they need to buy in order to gain market share. So why not own the options and stocks on the ones that are going to get bought out, not the ones who are going to do the buying? It's really simple. So biotechs, for example, okay? So our swing trades. Then we have swing trades on distressed stocks, which are leaders in the group, but for certain reasons they have fallen. Not fallen. They're down way down from their highs. Name one. Come on, guys. Let's see. Name one that I own, and I keep on telling people to buy it.
Win.
Thank you. Win is a defined chart. I've been showing the chart over and over again. You know it can go to 160, and it's going to go to 170 till it just breaks out and runs to 180, 190 again. It's going to happen. Win's properties are huge. I don't want to get into analytics of that, analytical stuff on that. I mean, they own Vegas. More importantly, their biggest money maker is Macau, China. Okay? Win Macau is huge. So, and Steve Wynn, decided to sleep with his housekeeper. God knows what he did. The idiot. I mean, that's what he did. I read a piece that he solicited favors from his 70-year-old housekeeper. I'm like, what the heck is going on? I guess when you have that, I guess you got that much money, you just don't know what the heck you're doing. You just want to go out in the deep dark seas. I mean, come on. His wife left him a couple of years ago. And she basically said enough is enough, and she started, exposing all this stuff. His wife basically took him down, and deservedly so, because he's an idiot. So Win Macau, what does that have to do with the business? Nothing. So it's kind of sad, but that's what happens, man. You got 40, you got $12 billion, you want to basically solicit, I don't even go there. It's horrible stuff. Stupid and horrible. So anyway, so he's out. So Win Macau is one of them. Give me another one that I did is on a tech side that I say keep on buying. Swing trades. And it's going to go. And
Twitter.
Twitter is one. Twitter's towards the highs. But Twitter is that's going to be another section called the buyouts, right? But they fall within the buyouts are basically all swing trades. You got to roll them out. And as you're approaching the strike date and stuff, you don't want to be like, oh, it's going to get bought out this Friday. We don't know when, but it's going to happen. So yeah, Twitter is one. The other one is VMware. Okay? And I keep on saying that. Buy VMware. Look, I know VMware from the time that it was spun off from EMC Corporation. EMC was the biggest database technology company in the world. Remember EMC Corporation?
Mm-hmm.
I don't even know if they exist. Do they exist? I don't trade them. EMC.
I don't know if they still do or not.
I think they got gobbled up.
By Dell.
Frank.
Dell or somebody.
This is Michael's company now, VMware. This is how he uses. This is the only public entity he has out there.
He has out there, and they're doing some fancy deals. Either VMware is going to be taken private, it's going to be used as some sort of vehicle. VMware's business is serious business. VMware was the fastest growing sector. I remember a subcomponent of EMC. I can't hear you. Who is that? Anyway, so these are swing trade. Then I have multiple small cap. Oh, let's name the biggest one, which I said from long time ago, and now it's just jumping like grasshopper. Like they say, patience grasshopper, Karate Kid. Go see it, okay? So Mr. Miyagi is basically saying patience grasshopper. That's what's required of swing trade. I'm getting a lot of feedback on somebody's microphone. Okay, what's the other big one? Come on. It just woke up in the past 2 weeks. Melly's a monster. It's not a swing trade. That thing is just a monster. I mean, seriously, what it did on Friday proved that this company is on the block. It's a buyout. Melly's a buyout soon. Not Melly, Chipotle. You guys forgot? Chipotle has been the biggest money maker for us just in the past 2 weeks. What past week? Chipotle calls. I mean, I started pushing that stock, and just after they announced the Taco Bell CEO is going to join thing. Like, look, you don't need to be a Wall Street analyst to figure out that they're hiring and bringing in the smartest guy in the restaurant business. Okay, what's his name? Nickel something. So he's huge. He turned around Buffalo Wild Wings. He turned around Taco Bell from a burger joint in the hood, okay, in the Bronx, right? Just kidding around, New Yorkers, like in the deep dark. It's like, oh, Taco Bell. Oh yeah, I'm going to go to Taco Bell, right? That was the story like 15 years ago. Yeah, I'm just going to basically go to Taco. You crazy? Let's go somewhere else. Look at Taco Bell now. Their franchises are booming. Their profits are booming. That's the guy who did it. Buffalo Wild Wings. The chickens were going crazy till he basically was the turnaround specialist. Read up on him. So he's in Chipotle right now. Now Chipotle's got to do a lot of stuff, but he's in there. And this is a major technical bounce that I showed where the stock's going to go. Short term. I said short term, the stock, let me pull it up on my other side. These are major swing trades. And this is all part of trade positioning. So the Chipotle short is just sick. It's got so much upside, it's not even funny. If they just change the stupid menu a little bit and add a few more things, not change it, but add a few more things to it, they should add some Jamaican jerk chicken. Trust us, their sales are going to go up by 900%.
Hey, I got the seasoning. I got the seasoning for them, Frank. I sell seasoning, so let's do it.
They do it. I'm telling you, just send the friggin' CEO an email. To change the flavor a little bit. Stop with the charge overpricing on the guacamole and stuff. Their guac is really good, but like that, you're gonna pay another $2.60 for a little cup. And then this queso garbage that they did, like, what is this? You feed queso to like an ISIS fighter, he's gonna be dead in 2 minutes. Okay, put some bacteria in it. You don't need to shoot him. I mean, seriously. I mean, horrible stuff. These are
Yeah.
major corporate flaws that they did. Anyway, the previous CEO, with the founder of Chipotle, he came from McDonald's, and Chipotle is still one of the best performing stocks in the New York Stock Exchange for the last 20 years. So the bottom line is, Chipotle's chart is just beautiful. I've been posting it repeatedly. We got a nice pattern symmetry going to 346. As traders, we're not looking to marry it. We're looking to trade it. And if things go right, that stock is going to be $500. No question about it. And I'm sure he's going to make things go right. So that's a major swing play. And this is, I didn't know that CEO was going to get nominated. So we bought it after we left it for a couple of days because the stock was sliding. The news comes out and we bought it at around 280. The low for Chipotle was 247 before the announcement. It just gapped open. And I said, this is beautiful. All of a sudden, the chart setup looks totally different. And I showed it to you guys repeatedly. This is almost, I hate saying this, a no-brainer. It's almost a no-brainer and a big money maker. It's been making money for us like right, left, and center. Intraday, it's going to go back and forth. Yes, I understand that. But my charts are very precise on Chipotle. Look at them. They're right there for you to see. It's a very technical chart, but it's not rocket science. So the thing is that, so that's another one, major swing trade. Then we have the ones which we call short-term bursts or momentum trades. Okay, so that's the second thing, short-term bursts or momentum trades. One of the sectors that we played very effectively about 3 months ago or 2 months ago is the Bitcoin sector. Not Bitcoin itself, but blockchain. Okay, I recommended stocks which are up 60, 70, 80%. These are stocks, for God's sakes. These are cheap stocks, $2, $3, $4. Blockchain was very hot. I ran with the momentum in the market. No analysis needed. Looked at the charts, went with it. News came out, bang. Looked at the charts, liked it, went in there. Within a day, it'll be up 60, 70%. Now, those are high momentum, short-term trades. I generally don't buy options on them. And Kodak was another huge winner. And Kodak is still in play. Stock stuck at 6. We played it from almost 4 to 11. 4 to 11. I'd wake up in the morning, boom. I'd have a couple of thousand shares, boom, up 2. Like, boom, sell it. Keep a little bit in there. So those themes that appear time to time in the market, I identify them. I use 3 different trading news services, so I'm always scanning them. One is briefing.com, highly recommended. All of you use it. Briefing.com. Another one is Benzinga that I recently started using. It's just fantastic. They actually show you like the exact options trades that are happening, happening meaning that are getting noticed. That's Benzinga, Benzinga. And then I use the fly. But so sometimes, the whole job of a trader is to get ideas. I can't scan all 9,000 shares in the stocks in the market, but they pick it up and I looked at it. If I like it, I'll run with it. So these are the high beta momentum. These are the high beta momentum, the name brands. These are the momentum type of stocks that appear from nowhere, time to time. There are services that just specialize in these little stocks that are running. Well, I just don't have the capacity to do that to that degree, but I certainly use them. So and then we have on the swing trades. Now these are the sort of the distressed swing trades that we like to sit on. Then the other major category are the industrials, which have now become great trading stocks thanks to the market. Name one that we have done very well on, and we are still holding and buying. And these fall in the cat. That's one, exactly. What's the other big one? Come on, Boeing. Okay, Boeing.
Yeah, Boeing.
Boeing. Okay, yep. Time to time, I will alert, which I did all the way from the bottom. EOG, one of my favorite oil stocks. You don't have to look around too much. Enroll Oil and Gas. You can trade Exxon. Cheap calls. Name another one, industrials. Walmart. I think it's a total buy right now. Screaming buy. And we've traded those options for 40 cents to $3 just 2 weeks ago, 10 days ago. Walmart is another one. Home Depot. FDX. So we have we have identified 4 different categories here. Okay. These ones you can trade during the day. You can take down your profits if you like at the end of the day. Or you say, okay, I'll leave a little bit in there because the market's looking strong, the SPX and all that charts I'm showing. Okay, you're going to go with that. You agree with me. Then you basically leave a little bit in there. Apple calls, we have traded them from 40 cents to $4, $5, $6. Huge money. If you think, not if you think, you don't have to think about it. Now, you don't have to put all your life savings in it. But if you put if you put a decent amount in it, you're making a huge amount, 300, 400, 500% type of gains. Especially when the market crashed, and I'll show you the Apple chart how precise it was. These charts were drawn before the market crashed. The precision is mind-boggling. Now, some people asked me like, how is it so accurate? I thank the machines because the machines make patterns very symmetrical, geometric. So when I draw my charts, I'm pinpointing those patterns. So what you guys are doing, you're learning how to read those charts and go with the flow. There was so much garbage on Apple. In the meantime, Warren Buffett's second largest position, as he disclosed over the weekend, is Apple. He's that stupid, right? Yeah, sure he is. His second biggest position is Apple. Everyone pushes Apple. You look at some of these analysts who are Apple haters and whatever, and I'm not an Apple lover. I love their devices. I was actually a late adopter to the Apple ecosystem. I was a BlackBerry user for a long time. I have a BlackBerry museum collection from day one. My wife said, why don't you put it up in a showcase? Why don't you throw these old phones away? I said, no, these are collector's items. The boxy BlackBerry from the back in the from the 90s, the 2000s. And then I came into Apple about 3 years ago, far long after other people adopted. And now I can't live without it. And I still don't know how to use a Mac correctly. You know that? You guys, any of you know how to use a Mac well?
No.
Okay. I don't. Because,
No.
and I think I'm a total idiot. In this day and age, we all three don't know how to use a Mac correctly. I mean, seriously, don't tell anybody that, man. They would just like these guys. I'm a PC user. That's the reason. Do I know how to use the iPad and my iPhone like a robot? Absolutely. But when it comes to a Mac, I'm like, how the hell do you move that mouse? And it's pretty pathetic. That's my next challenge. All right? Seriously. Because everything, so Apple is they say, oh, Apple iPhone sales were slightly down. Who gives the, flying whatever? Their services business. I pay I think for about 7 Apple apps that I consistently use for my business. Okay? Every month I bought those apps. And then I have Apple iCloud. Huge storage in there. I could put my house in that storage. It's that big. Okay? So, seriously. So Apple's making a heck of a lot more. They're into healthcare. They're into this. Who cares whether they sold 5 less phones in China? So that's what I'm saying. So anyway, so we have now we're going to move into, so we're going to leave in this. A high beta ones, which you can trade intraday. You can hold a couple of days depending on the short bursts of movements that we see in the market. Okay? Now somebody says, oh, I'm going to buy Apple and sit for it for 3 years. That's investing. That has nothing to do with trading. Remember that. Trading and investing are 2 different things. I have an investment portfolio which has nothing to do with my trading. The stocks that I have in there, I don't even touch it that much unless they need to get changed. Seriously. So just don't mix up, apples to oranges. Don't mix up your trading with investing. Investing is you buy something and you sit on it. You review the company, you like it, up and down, sideways. You have a long-term time horizon. In trading, you don't have a long-term time horizon. You want to see money now. Trading is the bling part of the financial business. You want the bling, bling, bling now. Okay? You want to look good now. So that's it. So your risk is higher, obviously, because of that, because you have to deal with more volatility on a short term. Swings, we have already covered. We have a bunch of biotech. Juno's gone. Blue, SRPT, CLVS, AVXS. Now, I've done real homework on these things. That's why I keep on mentioning these ones. SAGE, Sage Therapeutics, Fold, Amicus, Amicus, it's a weird name. I just know the thing. Amicus Therapeutics. It's a bunch of them. So you can buy a basket of them. And that's what we're going to talk about next. Then you have the momentum ones where you just grab it, hold it for a day or 2 or 3 days as long as the momentum is going. When the party, I try to identify people through my charts where the party's going to end, you get the heck out of Dodge. Okay? You don't get married to them. So industrials, you can trade them based on the overall direction of the Dow Jones Industrial Average. BA is the best. UTX is great. Great earnings. They're the sort of the smaller version of Boeing when it comes to the trade aspect. For energy, you have Enron Oil and Gas. Exxon you can play. And there's a bunch of other small ones like MRO. Then you have, oh, I forgot, US Steel, which I recommended, did very well on, took down a whole bunch of profits. In one day, they shot up because of the tariffs that's coming through. And then those are swing trades too, because the US Steel chart that I showed, somebody can hold them, and I'm still holding them for March, April calls. They're looking great. US Steel has huge upside. And so these are the ones. Now that we have this stuff, let's talk about trade positioning, for example. Let's say, for example, we start off with a round number, which everyone starts off, which is 10K. All right. So you can't really buy a lot with 10K and all these things. That's understandable. So in the simplest term, for your fast trading money, you should not go. I don't care how good Tesla looks. And Tesla's, by the way, in my opinion, the chart is like unbelievable. Not only are there monster Tesla trucks being ordered right, left, and center. The last story was DHL's CEO saying he's going to buy more. You got Tesla's SpaceX division going off the moon, Mars, Jupiter, and God knows where they're going. And on top of that, Mr. Donald Trump and Mr. Vice President Pence, who happen to be, in some cases, not very favored of emerging technologies, now says they want to privatize the space industry, which is beautiful. Who are the biggest players in the space industry?
Government.
Right now, the government. In the private sector, who are the biggest players? There's only 2 companies. Realistic speaking,
Virgin.
Okay, Virgin is one. Virgin is one, but the ones which we can trade very effectively on that aspect is Tesla, SpaceX. Okay, SpaceX, which is part of Tesla, and Boeing. They are in a race to move to forget the moon. The moon's gone. The moon's like from here to the convenience store. Now they want to go to frigging Mars. Okay, so Boeing and Tesla's got the highest juice. So bottom line is, before going there, so on the high beta momentum stocks, which I'm going to say HB, you want to trade during the day. You should not, in my opinion, and again, I'm not setting down rules. I'm just saying, because I've done some testing on small accounts which I've created and how much they can grow. So especially during the market drop, I created these the small account, just throw in there just as a test of what I'm saying, where it can go, and boy did they explode higher. So you shouldn't do more than 4K. So that's 40% of your money, just in those fast moving trades, the apples and all that. That 40%, if it grows, as I've consistently shown, within 48 hours during huge market turbulence. Okay, let's take these major points into account because it is very important. Now listen carefully. Okay, that 40% of the money, that's $4,000 on a minimum basis, can get you somewhere between 8 to let's keep it within round figures, 8 to 10K. Okay, so that gives you, and this is off some serious market volatility. I'm getting a lot of feedback here. Please, can somebody mute their mic? Okay, that's better. No, please. Okay, thank you. Because otherwise I can't hear myself. So that generates to you about, well, do the math. That generates to you between $4,000 to $6,000. So let's say, for example, you decide that you just wanted to do this, and and I'm talking about a time frame of anywhere from a week to less of these levels. Of these levels, you can also make some real decent money. Not to this degree, but maybe, yeah, you can make it to this degree. Apple calls more than double just in 2 days, just recently. So right there, your account's grown by 40%. Now you only used 40% of your money, so your cash level is, you still have $6,000 left. Swing trades, you should have at least 20% of your money, at least 20 to 30%. Okay, that leaves you with what? So the 20 to 30% is 70%. That leaves you so that puts $2,000 or $3,000 in those swing trades. Now, don't lump into one position like that's going to be God's gift to you. God will gift you if you do the smart thing. And sometimes you got to pray to God really hard. Like, come on, give it to me. I want that buyout. If you ask God, big time, He's going to give it to you. All right? But you got to be smart. So $2,000 to $3,000 in that. So that is taking up 6 to 4, 6, 7. That leaves you with about 30% in cash, correct? Generally speaking, you need to have 20% in cash. So you can take advantage of the dollar cost averaging. That is a must. It's mandatory in a volatile market. You buy a call at 4, it's down at 1, S&P at the SPX type of trading. You better have cash to buy a couple more at 1, and then you get these moves. You will never catch these moves if you don't got dollar cost average around here. You will never catch these type of monster moves if you, let's say, for example, you bought here. You bought this dip. Market goes up, suddenly falls. Well, you better have some cash to add here, because all the market is doing, look at how symmetrical that is creating a massive W formation known as a dragon bullish. So you got 30% in cash, or at least 20%. And you're going to deploy that to cost average. In the meantime, as these things are moving fast, you're not going to be sitting there saying, oh, I'm going to turn this Apple trade into a beautiful swing trade. Well, you know what Apple does during the day? Goes up. The hedge funds take their nice sweet money off the levels that I'm showing, and the next chart we'll see is Apple. I'm going to prove to you everything that I'm saying. And then, boom, they drop it. Like, what happened? People, you hear traders go, what happened? What was Apple news? There was no news. The news is that big black powerful server sitting in northern Jersey, which is one of the largest, by the way, high frequency trading, where the computers are for a lot of companies. Okay, that it decided to go boom, sell. Take profits, just the way I do. Now, I'm a pretty active trader on a bunch of these stocks, so I scale my profits in and out really, really quickly without completely leaving the position. And I've also sold a little bit early sometimes before, and then she'd run up another 60, 70, 80, 100, 120%. I know that happens to all of us, and that's okay. But you cannot leave the position completely, because the pain of missing out is far worse than the pain of losing a little bit of money. Am I right or wrong?
Right.
Right.
Believe me, I've gone through it, and it's no fun. Now, there's no way exactly you're going to sell at the top, even though we do a lot on individual stocks. But you want to get the whole meat in the middle. Look at Tesla. another chart. We're going to cover 2 charts after this, just to wrap up and keep things fresh in our head. Apple and Tesla. And we're going to take a quick look at the burrito. So bottom line is Chipotle. That you look at these things, I mean, it's just like, wow. So this is the simplest start for trade positioning. Okay? You got 10K, you got to play the fast money, you got to play with 40%. So that if the 4,000 completely blows up, like that, let's say the market crashes and there's no tactical charts, everything just goes out the window, then you lost $4,000. You're left with $6,000, which you can basically grow on the other side. You either go short. If I see technicals break in a substantial way, listen to my webinars. I say go short and sit on it for a bunch of days. But every time I have to really try to short the market on a 2 to 3 day basis, I've lost money. So best shorts are when the markets are collapsing, breaking certain levels, you do it during the day. Because this is a bull market. And it's a vicious bull market. So the tactical reflex bounces, that's what I call them. That's what it's called in technical terms. The reflex bounces are huge. So don't get married to the short side this quickly. So bottom line is, it looked like this was going to be a substantial short till the double bottom was created. Then it was see you later. And you know I said that correctly. I called it. It's right there on my YouTube, Say Trading YouTube channel. So anyway, the bottom line is, you got 4K there. You got on the swing trades, which you leave there, and you don't tamper around with it. You want to buy time on these things. With these things, which is your fast trading, you don't want to buy time. You just want to buy enough time to trade it. In other words, you don't need to buy them 3 weeks out, because then you're going to pay a lot more for your calls or puts if they're going the other direction. Do you understand what I'm saying? You want to buy the cheap calls expiring that week or maybe the following week. But why pay up so much for 2 weeks out on the weekly calls when you don't know what the heck's going to happen next week? Because the markets are getting overbought and oversold within hours. So we don't really know what might happen a week from now. 2 weeks from now. Do you understand what I'm saying? So for active trading, why pay up so much for it? When you can bring the short ones, the short duration calls into play, which will, by the way, move faster than the long duration calls going out a whole bunch of weeks. You guys obviously have seen that, correct? If you buy, for example, let's say a stock in one of these stocks, let's say Google. I call Google right after the market crash and after earnings. I said the stock is going back to 1,200. Mark my words, it's going back to 1,200. Okay, so bottom line is, on those type of drops, you want to buy swing trades going out a month, because Google's going to bounce. What's Google going to do? Okay, we're shutting down our search engine. If anyone wants to search for anything, please go to Bing. Bing is the worst search engine ever. Microsoft's thing. They don't make money on it, I'm like, Bing. Like, who the hell named it Bing? Sounds like a nice Chinese dish, So, seriously, Google's the monster, the ad monster, online aid, the presence and YouTube monetization, you name it. So when a stock falls and gives you a bargain, you're going to buy it and you can sit on it. But from a trading perspective, let's say, for example, you buy Google's at 1128. So when I told people to buy the 1060s, 1070s, okay, and I think it fell as low as 1,000. It did. So I had told people to buy the 1020s and 30s because at that time, we didn't know. But anyway, so people who bought, let's say, bought the like for safety, you bought, let's say, close to the money. They made less than somebody who bought the 1040s. Very simple. You know why? Because the overall IV or implied volatility of the move as to what is, you guys understand IV? On options? Okay, I'm going to explain the option aspect a bit. And I'm not you want to learn like all the intricate dynamics of how an option is, then just go to YouTube. There are phenomenal videos there from so many people. So look for one. I'll explain the basic idiot's version of options. Okay, how about that in a minute? So 1,000 to 1040. These are the people who were $40 out of the money when they bought the calls. So those weekly calls went up a lot more than the ones which were $10 out of the money, because the implied volatility or the expected movement on the stock was targeted at the 1040 level, because the smart money knew that $10 is nothing. You sneeze, it goes up $10 in 3 seconds, right? You understand what I'm saying? So the
Yes.
IV, so I sometimes get, I'm a little bit, even on some of the big stocks, I like to buy close to the money, but I'm paying up a lot for it. Because, and why do people buy in the money or close to the money calls or puts? What's the simplest reason?
Safety, I guess.
ROI,
Hmm?
return on investment.
No, that's not an answer. Nicole gave the
It's a
answer.
more
Nicole, one
sound
second.
safety.
Nicole gave the answer. It's safety. Because if you buy in the money or close to the money, if the stock fluctuates, you don't drop that much. But if you have a directional bias of these type of things, you want to buy a little bit out of the money, because the implied volatility, or IV, is telling you that there's going to be a vicious bounce. And in my words, like I put, there is going to be a powerful reflex bounce. How many times have I put that, of these type of levels within the next 24 to 48 hours? Okay? Because that's what happens. Sometimes known as a dead cat bounce, except this cat ain't dead. All right? This cat's going to bounce and eat the shorts alive, as it's doing with the markets in between pullbacks. All right? So that's why. So that's the answer. You pay up a little bit more for extra safety. In life, that's how it works. But that safety will translate into slightly lesser return. You'll make money. These ones probably went up by 100 by the time Google went to 1050, 1060. These ones were probably up 200%, and this baby, which was $40 out of the money, was probably up 400%. But if things went the other way and Google stayed around 1000 or 1010, then these ones would lose more value than this one. That's why you pay for safety. Do you understand that part, everyone?
Okay,
Yes.
yes.
Exactly. Very simple concept. So when it comes to biotechs, I like to buy close to the money or in the money. Why? Because biotechs, for the swing chart, I'm buying it a month out, 2 months out. I don't want to keep, just in case it doesn't work, I don't want to basically go way down on those particular calls, even though I know it's going to get there. But there are gamblers, and we have a whole bunch of traders who are smaller traders who have grown their account 500-600% just in the past 2 weeks. One of the examples is our friend House. House has grown his account 500% since the crash, following my ideas as well as some of his and my market direction. 500%. And I think he's on the smaller side of the account base. And House is very busy. He's a professional guy. He's based in California. You know who House is, right? The guy he comes in once in a while. He's a very busy guy. He's a smart guy. He's been with me for a long time. So ask him how he made 500%. So, and he buys sometimes lottos, which are like dirt cheap. Which one of the masters of that is House and Trent Kelp. They'll buy Apple lottos at 20 cents and sell them at 80 cents. 300%, but they will follow my directional charts and then use their own whatever they own strikes. Think about it. Okay, and then there are the bigger traders who then tend not to come into the chat room because they're busy. Then we have one of our traders who's been with me from a long time. When I used to post a lot on stock tweets and stuff, then I started the service. Lives in Long Island. He's Fish Eyes. He trades maybe once or twice a week. I'm not kidding. When he comes in, talk to him. And he'll slam on these SPX calls. He's a master of reading my charts in there. He's taken HCS for so many years. I said, dude, do me a favor. I don't want to give you any more coaching anymore. I'm just kidding. Seriously. All right? And he's a great guy. He's a friend. Became a friend, got to know him. He just trades literally 2 or 3 times, especially during volatile parts of the market. He nails big profits. He'll take down, and he's got his own auto business, so it already does well. He'll take down anywhere from $6,000 to $12,000 in 2 or 3 trades by putting in maybe 2 or 3,000. Dead serious. because he's playing these type of, let me clear this screen, he's playing these type of reflex moves. I wish every time the market did this, what do you call, I always said two things, and I'm always right on this. The most perfect moments of life and in trading are these moments, not these. Not these. The biggest opportunities lie in the heart of the darkness, of the storm. These, not these. Because for the market to get into this bear kill zone, which I think it certainly looks like it will, it'll chop around, chop around. Here are the most aggressive buying opportunities when the room is dead silent, when nobody says even hello or good night when I end the day. I know they are just in some sort of bunker communicating with somebody in Mars. I'm serious. I know retail traders like an open book, guys. I can make Dr. Phil look like a child when it comes to reading traders. Okay? Traders are like big babies. There's nothing wrong with that, but be a smart baby. Okay? They're like big babies. They all like to say they're mature and they understand opportunities, this and that. Garbage. So the only way you can become a smart baby, because I'm still like a baby, all right, when it comes to the world of trading. I truly believe I learn everything every day. I do. I don't make this up. But I see the same things happen over and over again. The silence, the fear, the non-buying. Oh, I missed this. I'll buy next time. Yeah, next time. The next time never comes. While you could have doubled, tripled, quintupled your account. Facts, guys, facts. Easy? No. Mentally, you got to be strong. Because even on these type of run-ups, there's little zigzags. And every time the market crashes, it's like a trauma, right? It's like you land up, for that moment, you landed up in the emergency room at let's say, NYU Langone emergency room. So when you go through trauma, you tend to freeze. Well, these charts will help you unfreeze, and you got to be unfreezing fast. The only way you can unfreeze fast is if you have some cash on the side, or add cash, because those are the opportunities which you're not going to get. You're not going to get these opportunities too often. It will come. It comes maybe once or twice a year, max. Facts, guys. Okay? So bottom line is that these are the most aggressive buy points, and then you trade along the way. This is not the most aggressive buy point. These are tactical buy points. But the good news is that everybody, excuse my French, or I say New York, is so shit scared of the stock markets now because of the volatility every day and what happened just within the past month. It's so fresh in their head. No, within this month, that they don't want to touch the stock market, which is extremely good news. Now, how do we know that? I've explained this before, I'll explain it again. More than $24 billion went out of the stock market during these couple of days. Mom and pop said, that's it. Sell my mutual fund. They're not saying sell me back the money. Put it in the money market account. That's what they do. My first job was at Putnam Investments in Boston. And I used to handle customer calls. That was part of the training. And every time the market breached, I didn't know anything about the market at that time. I did know something. I was always, And but they called up and said, sell my growth fund, the Voyager growth fund, and put me in the money market. It's the same thing as running out in cash. And I don't think much cash has come back into the markets from mom and pop by calling back Putnam or Fidelity and saying, oh, put me back in the Voyager fund. No, because they are terrified. And the market doesn't care. And overall, we're going higher. And we will retest those highs, in my opinion. Is it possible we retest the lows? Absolutely possible. But it's going to take another monumental event. Like that one was a volatility trade blow up. It might be a Chinese credit situation because of the shadow banking stuff. Don't want to get into it right now. I've explained that stuff on my webinars. It could be, there's no banking credit crisis here. Our banks are very solvent, very strong. There is no funky stuff going on because of all the different rules and regulations. The Federal Reserve is on watch. The other risk is that inflation picks up in a big way, which I don't think so, and has been echoed by some big names. Okay, but if inflation picks up really quickly and we get very strong inflation numbers, it's going to put the 10-year government bond into the 3+% territory, and that's going to rock the markets. Understand? I've already explained all that stuff. That's the only risk. Those are big risks, but I don't think the Federal Reserve is going to say, oh yeah, let's, they've openly said they are going to be gradual improvement in interest rate. That's the reason why the market shot up, pulled back on Wednesday, and I said nothing changed. Read my tweets, showed the charts, and then Thursday ramped up, and Friday, see you later. But on Wednesday, when the minutes of the last meeting came out, now that's my job to guide you through that stuff, because I breathe and live those type of Fed comments. Don't try to be a Fed analyzer or a watcher. Trust me, what they say is hidden in their words are hidden, just like any other thing in life, in many different layers. You have to understand what they're saying. They said gradual approach. They're in no rush. Why should they be in a rush to dramatically raise interest rates and kill the U.S. economy? That's not what they do. Everybody hated the Fed during the Obama administration, or during the crisis, right? They said, "Oh, look at the Fed. It's a tool of the Democrats, and they are going to keep on pumping economy in the market. It's going to crash us and burn us." You guys remember that?
Oh, yeah.
Yeah, it was like hate, hate, hate. Where did the markets go? A gazillion points higher? Because of Fed action and governmental action in infusing money into major industries like General Motors and stuff, our economy survived. I'm an ex-Wall Street guy. I should know it. So don't listen to the garbage out there. Oh, our debt's going to completely kill us. Yeah, if we keep on not growing and our debt keeps on growing on the deficit side, of course, it's going to eventually come back to haunt us. But don't forget, we're printing our own money, so we can decide not to pay ourselves back. How about that? If I had a money-making machine on my HP printer and I said I'm going to print $100 every day, okay, I'm basically growing the balance sheet of my thing, right? But then what if I tell myself, I don't want that. I'm not going to want any interest on that for the next 10 years. No effect, right? You understand what I'm saying?
Totally.
Yeah.
Exactly.
Yes.
So I don't want to get into the high-level economic stuff, but there are dangers. But these guys are good, smart people. The Fed has always been good, smart people. They're not bipartisan politics. They're not the crazies in Congress and the Senate. They are not shooting off AR-17s and 15s and AR-57s, okay, into schools. They are solid, balanced people. We have the finest central bankers in the world. Okay, saying all that, let's loop back here. So here is the daily chart. The lines are very clean. Each of these candles are worth hundreds of % for you guys. Okay? This is telling us that we want to go to 2752 and eventually, short term, not eventually, we're going to land up here. Look how perfectly these lines are drawn. Okay? So you don't have to even do the work. I'll do the work. That's my job. But you gotta trade these things. This is billions and God knows how many billions of dollars worth of major money that went into the S&P 500. And then this. But forget that for a minute. Just focus on this. This from here to here, from 27 where we closed at 27.48 or whatever to 27.63 is another 150% on your calls. What more can I deliver? So, and then if somebody wants to buy some longer dated calls, but I do it step by step to see what the reaction is there, because the reaction here, mechanically speaking, can be this, hits major resistance, right? That's why these red arrows, and then pulls back here. How about that? That's a good solid 200 points down again. And then it decides to basically bust a move. So Why buy them 2 weeks out? I play them on a weekly basis. Okay? So this is the full pattern. This is the full pattern symmetry of what happens right there. So somebody might say, I'm really busy. This is part of trade positioning, and I don't want to look at this stuff. I will look at the charts out on it. Like somebody says that, and I have a couple of traders do this. They will buy into the end of March or mid-March, because I think March is going to, April gets tricky. Why does April get tricky with the markets on the pullback side? Nicole, you know the answer. Thank you. Texas. Texas. It's simple. Between the first week in April stuff, there's always selling. So they'll take the market higher, allow people to make money so they can sell and pay Uncle Sam. It's a beautiful capitalist way of doing things. You understand what I'm saying? Your stocks move up, you take profits, and you pay that back to Uncle Sam. Unless you have a good tax accountant and you don't pay any taxes. Just kidding. Or you minimize your taxes. Think. That's how it works. Okay? So there's always major pullbacks around middle of April. So you got March to play. So the way you do it, you can say, okay, I'm going to buy some calls. Of course, they're going to be, you're going to buy them that far out and time. No, they're not going to be that crazy expensive. They probably won't be that expensive. But you notice the premiums on SPX calls have been quite expensive. Why? Because the so-called machine-driven smart money knows they are going to go higher. So somebody can buy the 2,800 calls or 2,840 calls, because remember, this is a major resistance level, right? So you can buy the 2,840 calls and leave it on autopilot. Buy one. If it pulls back, let's say it pulls back a little bit, you look at my alerts and stuff, buy one more. The biggest monies ever made, and this is one of the final things I'll say before we look at those two other quick charts. The biggest money's made not from buying something overall and then it just shoots up. That happens to intraday momentum trades and stuff a lot, SPX trades. But the biggest money's made, you buy something at, let's say, I'm giving a hypothetical example, at 6, it drops to 2. You add more. So let's say you bought one at 6, you add 4 more at 2. Then it goes up to, let's say, 3. You add some more as the bounces start going. Okay? So you got 1 call, 4 calls, you buy another 2 here. So that's 7 calls. As it's shooting higher, you buy another 2 because then you're playing the momentum. Okay? The momentum right there. This is not momentum. This is a reversal. We don't know what's going to happen after. The momentum candles start after the 3rd day. What's known as a fill in the blanks. I've said this a couple of times. Al might not know, but Nick, you've seen me use that word. Scott, you'll probably know the answer. Known as a follow-through day. The follow-through days is the 4th day after the crash. Has to be green. This is the crash. 1 day, 2 day, 3 day, and the 4th day. Magic! It works. It was devised by William O'Neill, the founder of Investors Business Daily, and one of the finest technical traders out there. That's why Investors Business Daily is, I don't really look at it, but is a trader's, Bible. On the 4th day, the phoenix has to rise from the ashes. Otherwise, we in trouble. Like they say, we're in trouble, boy. Okay? In deep trouble. So that's known as the follow-through day, FT. So, let's say, you see the follow-through green. You say, that's it, I'm adding. Okay? So by this time, how many calls do you have? 1, 4, 5, 7, and let's say you bought 3 more. So all of a sudden, you have 10 calls with an average cost. Well, you can do the average cost. Your average cost is no longer 6. Your average cost is somewhere around 3 at this point because you bought a lot more here. 3 to 4. And then the calls go past 6, 8, and you just made yourself more than 100% on your money. Guys, these are not just fictional representations of things that can happen in Alice in Wonderland. This is happening every week. and in some cases every day. So that's how you do it. Now there's far more to it, but I can't spend the whole day like walking, for further sessions we'll discuss it more. So at this point, let me all this I'm putting in simple but real terms. And for you to look at my alerts, because I'm not just alerting just to keep you guys excited. I'm alerting because there are actual factual things changing on the ground, and I'm following my charts and telling people what to do. Then they decide what they need to do. I'm not responsible for other people. I have no fiduciary responsibility whatsoever. I'm just suggesting stuff, and you guys have to look at this stuff and say, hey, that makes sense. I'm going in. And then you have to get your mental demons in your head under control. And the only way they'll stay under control is if you follow and understand tactical charts. Believe me, it's not supposed to make you feel good. So what I just simply said was that volatility trade where you bought at the higher level, you bought at the lower level, you bought at the despair lows. These are despair lows. Okay, this is when you don't want to even watch the NBC. So bottom line is, and then you buy the momentum and you make big money. Always, in my opinion, from my experience, the dollar cost averaging has pushed me into a higher number of that position. The position size has gone higher, and then I just it's just it's beyond kaboom. It's just like free money as it's rocketing higher. Happens all the time. Not to this degree, but happens all the time. Even happened for the past 3 days as the markets were consolidating. And I said we would bounce off that gap. Guess what? This green line is not the Nile River. Okay? That's a gap. And that gap was retested. Can't make these things up. That's why we have a big blue arrow here. Make the arrows your friend. Make the candles your friend. And you too shall see the light. I'm not kidding. This pattern, I have repeatedly said, and Scott, don't answer because I know you know it. I have repeatedly said, if anyone bothers to look, is what pattern? One is a W pattern, dragon bullish. But what else did I say this is? This long-term swing chart.
Cup and handle.
Thank you. It's a cup.
A cup and handle.
That's right. Thank you, Nick. So anyone who likes tea a little bit while watching cricket decides to have a cup and handle, well, they can make a heck of a lot more money. This is a frigging cup and handle. And I saw it. I kept on repeating it. Discipline. Because when I'm trading, I'm not kidding, guys. I am like a robot. And this is a cup and handle. Now, is it possible that the cup would break? The handle would break? Well, there's always a possibility if it fell below the gap. But I wouldn't be sitting there telling you guys to hold on to something. We would go short. But my calculations were correct. Now, was I basing everything just on this chart? No. There's a lot of work that goes behind the scenes, as I always repeat it. I use almost 32 to 34 different indicators to look at what's going on my multiple screens. I show certain charts in a simple fashion so people can follow it. I could show a chart that's got so full of indicators, you guys would, basically get dizzy and fall off your chair. What's the point of that? Keep it simple while I do the background complicated work. And one of the platforms that I use, and active traders who have ample time to look at things during the day should always use, and I've told people to go ahead and do their free trial and sign up with them, is one that I've been using for more than 12 years, is the Quad platform, QUODD. Okay, watch out, what I call the Algo HFT platform. Gives me signals as I read them faster than anything I've ever seen in my life. Anyway, so that's it. Now, that's where we stand. Now let's take a quick look at look at this. I'll spend the whole afternoon. We got stuff to do. Okay, this is it in the simplest terms. There's a very large cup and handle. This is your 50-day moving average. You guys can just set this up on your own screen. That's 27.31. I know the market wants to reclaim back. I've said this over and over again. Okay. Reclaim back its 50-day moving average. The internals kept me in the game. Real simple. The crossover was intact. And despite the volatility in the market, these two beautiful lines can make you very rich, known as stochastics. On the daily cuts out the noise of the 5-minute, 15-minute, what I call the monkey on a hot tin roof routine. Okay? Monkeys on hot tin roofs generally don't get the big bananas or whatever they're going for. Okay? The ones who stay patient generally tend to. So patience, grasshopper. As long as these are cooperating. Crossover and kept on going higher. So the small consolidation was A-okay. Then we busted a move which better hold. And it certainly looks like. So I'm not going to be looking at a gift horse in the mouth. I took down some nice profits. I'm still long. Bunch of stuff. But the SPX calls, I took down a bunch of them at the close. Why not? I bought them around 4. They're at 13 bucks, $14. What do you do? Just say, okay, I'll leave everything open? Sure, I can. I know. Market most probably going to gap open tomorrow. And then they'll sell. So this line here is your 34-day moving average. Let me change the color. And all this, Al, you got to play some catch up and listen to my videos and stuff. These are the two major lines that I use. That is currently at, lo and behold, 26.53. And the red line here, the 50-day moving average. What more can I say? They just took it up. The shorts were scrambling. They're like, holy crap. You know, if you were short on Friday, and because the markets were chopping around for a good portion of the day, I'm sure a lot of traders were short. Because, you know, I monitor stock twits also. And they're always like, most of them are short. I don't know what the hell to do. So anyway, they just died. And they're scrambling. This is the polar opposite of what happened here. Except the difference is, here, it happened within 1-2 days. And then the third day was on the 5th day. Here, it's taking multiple days. 1 day, 2, 3, 4, 5, 6. Little pullback. Now the second leg, or the cup and handle breakout has started. This is a cup and handle breakout. So that's it. So I play the levels. You pick 10, 15 points on the S&P 500. What's your returns, ROI on options? Scott?
I'm not sure now.
Well, I'm sorry. What'd you say?
100%?
Yeah, more than 100%. 100 to 150%. Yep.
Yeah.
Exactly. Yeah. And especially if they don't have that many days left for expiry. You got it? Those are the ones which tend to move the fastest. Yeah, you're absolutely correct. So why not? And then so now this is where we are, and what we would like to see is this line here, the blue line. That's a 20-day moving average. We would like to see it turn. The only way it's going to turn, and this is the beautiful part of the technical analysis. The only way this lovely blue line. Let me try to change the color if the system allows me. Pen, color. I guess it won't allow me. Okay, fine. So the only way it's going to turn, this blue line, okay? I'm still going to... 1 second. Choose pen color. There you go. So I'm going to pick blue. Is it giving me blue? Yeah, it gave me blue. Nice. So the only way this blue line, which is the 20-day moving average, right?
Mm-hmm.
Is going to turn is when we get another monster move like that. You need force to get out of a gravitational pull downwards. Even though we have recovered huge and we have done very well on that, but the actual trend change is just beginning. The actual trend change began a couple of days ago when we broke above the downtrend line. You guys see what I'm saying? So this consolidation or profit taking for people who didn't get in before was nothing but a buying opportunity, as I kept on showing on my charts and telling people to do. Okay, when a cup goes like that and you miss that big portion of the cup and then it pulls back, well, use that pullback based on the levels that I'm showing as a buying opportunity, because this candle, when it happens and you're not in here, well, it doesn't feel good. And you know what? You just left a huge bunch of money on the table, which means you lost that money. What you don't make in life or trading is what you lose. Yes or no?
Yes.
There you go. Facts, guys, facts. Not alternative facts, like Kellyanne Conway likes to say. Real facts. So bottom line is, another bullish breadth thrust, as it's called, candle, will most probably come to move this, to turn this, will require serious force. So a little bit of trepidation here at the 34-day moving average, or 2753, maybe a small pullback to retest the 50-day moving average, and then a big fat candle will be the only way that this beautiful blue line turns up. And as it turns up, gentlemen, because remember, the 34 and the 50-day moving average never changed directions, correct? They kept on moving sideways. See that?
Mhm.
Yeah. So all this calamity that the world's changing and interest rates are going to be 30% and more, nobody will be able to buy a house till they're 900 years old, and all that garbage just got thrown out the window. The 34 and the 50-day moving average simply move sideways. Look at that. That's how you interpret charts. So bottom line is, this candle has to break above after consolidating a bit. So you're talking 50, 60 points, maybe 100 points, that type of stuff. After consolidating a bit on the Dow Jones, not on the S&P. You don't want a 100-point drop on the S&P. That's like this stuff, obviously. And we do want it, because at that point we're going to be positioned short. But let's say a little minor pullback and then another candle developing. Remember, candles develop back to back, and this is the simplest part that traders don't get it. When it can't, this was a huge reversal candle. Did the next day the market just shoot higher? One person at a time. Well, I'll leave alone because he just Nick. Did the next day the market just shoot higher? Look at this picture.
Yes.
No, it didn't.
Mm-mm.
It went down.
Oh, where are you looking at? Oh, that one. Oh, yeah.
Yeah.
Mhm.
So what happens is candles don't grow on top of each other without creating small pullback. I have never seen candles would do this. In other words, they open up, and then next day they open up. What happens is they pull back a little bit. Look at that. They pull back. See the bottom of the wick? And I suggest all of you go back and review that 15-minute video that I didn't create. I found it on Pinterest and I put it up there on candle dynamics. It's a robotic voice telling you how to read candles. And then it's very easy. So every time that the markets went up, it didn't just grow on top of each other. What happens when you put cards on top of each other? They topple, right? They topple. So here, if you notice, they go up. The candle means that the market actually closed here. See, that's it. That was the high of the day. That was the low of the day. And the market closed here. Got it? So the next day, the market
Yes.
pulled back. And then went way up high and then closed here. Next day, the market pulled back. Went way up high, tried to take over the previous day's move higher, but then closed here towards the high of the day. Good stuff. Everything is perfect here. Crossover intact. This is not hard, but once you master this simple method, you're going to seriously make some serious money, guys. I'm serious, all right? Otherwise, you're going to make money and give it back. You're going to make money, you're going to give it back. You're going to blame the markets, you're going to blame my service, whatever. Doesn't work like that. Use the simple method. So the next day, the market pulls back reasonably hard. See that? So you guys, not you guys, but most retail traders scrambling. In the meantime, we're like, we love this stuff. Stochastic's great, market little minor. What do I call them during the day when the markets pull back in the midst of an uptrend? Come on, guys. You guys don't look at my tweets. You guys, obviously are not doing things right. They're known as intraday resets.
Resets, yeah.
Yeah. Forget Al. Al, you get used to it. Intraday resets. Back and fill. I don't use the word back and fill. That's like an old legacy term that granddad liked to use. Oh, we're back and filling. Yeah, right, back and filling. Your fill could be a big hole. It's just a stochastic reset. Because when I switch this down to a 1 hour, it doesn't cross over like that. The 1 hour goes overbought, oversold, overbought, oversold. You got to buy oversold in the midst of an uptrend. So it pulls back and then bang, 90% of retail traders completely miss out. Oh no, the markets can go higher. This is crazy. That's what you hear, right? You hear that in the media sometimes, a lot. You hear it to a great number of emotional idiots on stock twits and other trading forums. Oh, markets can go higher. This is crazy. Yeah, it's okay. It's really crazy. Fine. I'll be crazy and rich. And then next day, markets pull back. And bang, creates a massive hammer reversal. By this time, maybe some people are buying. Well, bad luck, guys, because by that time, it's gone past the downtrend line, but it's hitting the 20-day moving average. And for the next 3 days, the market, in general, even though during the day it went up and down, creates red candles. Just another handle. And now this is going on. So, does it mean that, I repeat, and I want a straightforward answer, because I explained this in 6th grade terms right now. The next day, on Monday, the market will most probably open higher, and then what?
Retreat.
Reset.
Else, you
Reset.
stay away from this and just understand it. Yeah, I'm asking Nick and say, retreat is a word that was used in the 17th century when some general said, retreat! Markets don't
Reset.
retreat. Markets reset. Markets go, markets basically go from overbought, oversold, algos never retreat. But that's a beautiful word, by the way. It's very English. Thank you, sir. Let's retreat and go back into our bunkers. All right. Let's get a little Scottish malt, and while we drink, we'll retreat. Forget all that stuff. All right. So bottom line is, it's going to pull back a little bit. It might open up a little bit and pull back within the first hour, like markets do. Profit taking. That's what I do. Why should I give away 16 points on Amazon and Tesla 8 points right at the open? That's a gift almost every day. So I take profits and then I move my strikes higher. So generally speaking, here's the candle. I'm going to expand it. It just won't build on itself. It'll probably open higher, pull back, freak everybody out, create that 15-minute, 1-hour resets, and then go higher. Now, these entry points and stuff, that's what I pinpoint to the dot. Now, if anything changes and we lose the 50-day moving average at 27.30, sayonara, I will short the market hard. After all this work, the market went above. Look at this. The market attempted to go over the 50-day moving average a couple of days ago. Tuesday. Wednesday. Went well above the 50-day moving average. Sold off. That wasn't a good candle. No one can say that. That's like a Chinese firecracker during Chinatown New Year celebration falling on top of your head. Okay? You don't want that. It's like a falling hammer. That's why it's known as an inverted hammer. Don't go to Home Depot and try an inverted hammer on your head, okay? It's not a good thing. We like reversal hammers on the long side. Inverted hammers are good shorting opportunities, short term. This is all happening in the midst of an uptrend, midst of a cup and handle. The handle creates inverted hammers. As long as the handle holds, and my other charts have showed what the lower level of this inverted hammer is, you're not going to land up in the emergency room. You want to be a buyer. We were buyers. That's all. Now, we're getting close to a serious overbought condition right here. And that is going to be most probably in this zone. And we're going to be fully overbought on the daily. Don't be a hero there. Well, you guys are not trading blind. I'm always there. I'll be a shorter. Now, if it just moves back a little bit down, I'm giving you some forward forecast. We don't know yet. If it moves down a little bit, that's very healthy. It's another handle. And then busting a move. If it just creates a small handle and breaks up, we're going to take new highs in the market, gentlemen, ladies. We don't know yet. We'll watch. And I'll study the indicators and I'll let you guys know. So basically, that's about it for today. There's a bunch of solid information I've given you. Just showing you the Apple chart for a quick second. And keep in mind, Al, it's not just charts. Naked charts on itself means nothing. You wouldn't know what the heck is going on. I'll give you an example. If I showed you this chart of the 1 hour like that, you wouldn't know where the heck the market's going. But when I structure it like this, you know where the market's going. You understand what I'm saying?
Yes, sir.
Exactly. Just to open highway without knowing where the big potholes are and where the cops are sitting to nab you as you're driving 110 miles an hour is going to land you in jail. So in trading, just naked charts without the structure will land you out into the ditch. So Apple, Apple, Apple. Look at Apple. So here's Apple's chart. Looks like really busy right now. So let's zone in. This has been drawn and presented to people repeatedly. So Apple hits that bottom, which I had drawn. This was the downtrend channel. Downtrend channel. On the fateful day that Apple hit that lowest level, where I said also buy the 150 level, it happened to hit exactly to the dot the lower end of the downtrend channel. Do you see that? Do you see that? Yeah. Unbelievable. You can't make these things up. And this downtrend channel was drawn well before it hit that level. Now, some people might say, oh, we knew Apple was going to 150. Yeah, sure, you knew Apple was going to go to 150. Emotional traders in general they keep on lying to themselves all the time. None of us know exactly. That's the reason why we have the functionality and the predictive analytics of these structured charts, to give you a higher level of confidence and a higher level of profits. That's it. Okay, so it creates a hammer, then then it pulls back a little bit that day, the next day. Lots of juice. And can you just mute the microphone, please? Thanks. So, and then it does this. So Apple right now is climbing a complete V-shaped recovery after consolidating for approximately 4 days. Apple overall is the market many times. This is exactly what the S&P 500 is doing. So the highest level Apple can get to is that 177, 178 level. And if it goes there, that means the calls will be up 200%. And Apple calls are cheap. In between, can it do a quick pullback? Absolutely. But this is all conducive. But intraday, Apple moves like this. Even when it's going higher, it moves like this, right? It opens up big. It opens up big, goes into profit-taking mode, kind of moves sideways to like this, and then end of the day, it starts to move again. That's Apple's MO. So this chart keeps you in the trade. So if you bought some calls at like $1.50 or $2 and they pull back to 120, you don't freak. You add. And it's all the lines are drawn where it can fall. Worst case scenario, short term, Apple can easily drop to 173.12. The line's been drawn there. Show you one more. These charts are a nightmare for the shorts. I'm telling you. I'm not talking about just my chart. I mean, these type of breakouts, I mean, look at what's going on. It's a nightmare for the bears. They're just like, remember, when the bears give up is when markets create short-term tops. I mean, look at this stuff. That's a NASDAQ, and I've been showing this. So this is, it's not wild. I shouldn't use the word wild. Why is it wild? It's mechanical. It's robotic. These companies are growing at more than 20, 30% a year. Some of them growing at 70% a year, like Melly. That was a huge trade I just laid out to people. And a few took it and most people didn't. I'm like, what is going on? But what do I care? I don't really care. That's why I don't really, in the chat room, I don't bother people. Like, oh, did you buy this and that? I'm like, it's really wasting my energy. Melly's like huge. 50-point turnaround. And all shown repeatedly during the day. And what is Melly? Mercado Libre is the biggest player in Argentina and Brazil and Mexico. They are the Amazon and the Google of Latin America. So that's it. What's the other one? I want to show win. Oh, let's see, Melly. Hallelujah. You want to mess around with this candle? I don't think so. Can the stock pull back a few bucks? Sure. But look at this. It's telling you. A child will look at this. I'll probably eat my words, but it's technically it is going to $400. That's it. Now $400 will create the full cup. This was the cup. This was your handle. See that? And then it slipped after hours. Said buy. I actually have common stock that I bought after hours. You don't even want to know how much I'm up on those. All right. And it's not like I went and bought 1,000 shares, use up major buying power. I bought a couple hundred shares. Is that somebody's beep going off in their brains, or is there a phone?
Just a sidebar.
I'm just kidding. So at this point, this candle is going to resolve itself around here. In between, it can do this. Who cares? That's a real swing trade too. Now, it's a volatile swing trade. It's melly, but that's the way it is. And most people don't even know melly. They think it's some sort of like Etsy craft that they sell on Etsy. Hey, can you buy my melly necklace or whatever? Melly is not known, which makes it extra good. Here's Steve Wynn minus the housekeeper. Okay, so I'm dead serious. All right, Steve Wynn gone. They didn't pay him $300 million. You know that, right? I posted that. His severance pay was $300 million. What does he care? He's probably going to move to a remote island in Thailand and have a lot of girlfriends there, and still be worth the zillions of dollars. So here's Win. So Win is in a range. On a swing trade, I think it looks great. Can it be down $2 some days? Absolutely. Was it down $2 the day before I said buy it? Absolutely. But things go right based on the factors in play. The stock is going to fill this gap. And win calls are cheap. Swing trade. Really not to overthink things. And if it drops suddenly to 160 because of a crap analyst downgrade, it's already reflected that in the price, then you want to add more to the calls. Now you buy some time in it. March 16th are a good time. That's what I've been saying. That's it, guys. Listen, it's 12:22. That's a 2-hour session I just did with you guys. All right. This is a 1-hour session credit. So just got extra bonus. Have a great afternoon. And I'm going to do a free market update webinar going over some of the same things that we spoke about. So, but I'll be doing that at 8 p.m. tonight, like I always do. I only need one thing from you guys, okay? And I'm, just mentioning. Just give it, if you feel that this was helpful and beneficial, then go ahead and write a 2-line testimonial and put it up on the website. I want people to know what you guys are experiencing, good or bad. It's never censored. You go ahead and put that on testimonials on the website, and then people get to see it. That's the way I market my service. So if you feel like doing that, do it. If you don't, no problem. In the meantime, we'll see you guys tomorrow, if not tonight. God bless you all. All right.
Thank you, Frank, so much. I appreciate it.
Thank you, Nicole.
Thanks, Frank.
Bye-bye. Thank you.
Have a good one.